Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 31st of August 2024. We're publishing our gold and silver weekly update for the week ending the 30th of August. Gold and silver markets were choppy this past week, moving in multiple directions, but closing easier for the week. Is this just a period of consolidation before the next major hike? Well, let's take a look. First, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who have not as yet joined that channel. Now, gold fell $9 last week, falling from $2,513 to $2,504, having hit a high of $2,529 and a low of $2,494, a fall of 0.4%. Gold spread between high and low was a mere $35. Last weekend we said gold would trade between $2,475 and $2,575, which it did quite comfortably. In sterling terms, gold actually rose £6, closing at £1,909. And in euros, gold rose €20, closing at €2,267. Silver fell 97 cents, falling from $29.84 to $28.87, having hit a high of $30.38 and a low of $28.73, a fall of 3.3%. It had outperformed gold in the past few weeks, so a correction perhaps was anticipated. Interestingly though, silver's high was marginally higher than the previous week, but its low was marginally lower. What that says at this moment, difficult to assess. The difference between its high and low was $1.65. Last weekend we predicted silver will trade between $28.75 and $31, and again it did this range comfortably, dipping though just 2 cents below our forecast low very briefly on Friday. In sterling terms, silver closed at £22.04, that's down 58 pence. We call pence p's for those who aren't from the UK. And in euros, it closed at 26.25 euros. That's down 0.46 euros. Obviously, the gold to silver ratio went up 2.5 points, from 84.2 to 1 to 86.7 to 1. Bitcoin is down just over $5,000, reversing the previous week's gain at $59,110. Equities were mixed though. The majority of indices were higher, with most gains achieved on Friday. The Dow Jones closed up 388 points at 41,563. The S&P 500 up 14 at 5,648. But the Nasdaq was down 164 at 17,713, with the FTSE index up 49 points at 8,376. Oils were lower and heading towards that mid-70s mark, hopefully into the early 70s very soon. Brent crude closed at $76.93, down $2.09, and WTI crude closed at $73.55, down $1.28. The dollar regained some composure and was up almost 1 point on the week at 101.69. Now last weekend we stated, quote, traders are now pricing in a 67.5% chance of a 25 basis point rate cut in September, with a 32.5% probability of a more aggressive 50 basis point reduction. Well, last week's economic data did nothing but support a rate cut in September, though we would argue it's more likely to be 0.25% than 0.5%, and we'll explain why in a few seconds when we announce some of the other data points which have proven quite strong. Consumer confidence figures announced on Tuesday were high at 103.3, some 3 points higher than the previous month. GDP quarter 2 was revised upwards from 2.8% to 3%, and the all-important data announced on Friday showed that year-over-year PCE rates held firm at 2.5%, and the core PCE rate year-over-year also held firm at 2.6%, when actually most economists were expecting a 0.1% rise. Despite this, precious metal prices on Friday fell, silver particularly so, which is quite surprising, bearing in mind that stronger GDP growth is anticipated, and so one would have expected silver to benefit via industrial demand. At first sight, it does appear that markets have now already factored in a rate cut, and arguably will only shoot precious metals higher if a second cut is envisaged in 2024. Always remember, traders buy the rumour and sell the fact. Quite a few precious metal specialists and traders are arguing that both gold and silver require a small period of consolidation before the next move higher, and we're now about to finish the holiday season. Interestingly though, and historically, if we look over the past few years, October, admittedly we're entering into September, but October has shown itself to be the period where gold dips to its lowest for the year mainly, only to then gain a significant recovery towards the end of the year. With a general election in November, we have to ask though, will the same happen again? Now this coming week, all eyes will be on Thursday and Friday, but first on Monday we have the Labor Day holiday. For all those celebrating it, have a great break. On Tuesday, manufacturing PMIs for August. Wednesday, US trade deficit and factory orders for July. Thursday, though, all eyes here, ADP employment report and the services PMIs for August. And perhaps and arguably the most important day, Friday, we have the US employment report or non-farm payrolls for August, expected to show 162,000 new jobs, and an unemployment rate to fall from 4.3 to 4.2%. Remember, the employment figures have previously been revised downwards. So the question to ask is, did precious metal prices fall on Friday as traders squared off their books before a long weekend, locking in recent gains? Or is it because we're entering a period of consolidation with softer prices until the rate cut actually takes place? Or are we going to see some recovery this coming week as renewed enthusiasm gathers? Well, truthfully, it's a tricky call. We would have hoped for better inflation data, which would encourage traders to argue for a second rate cut this year. Stronger economic growth and higher hourly wages suggest the economy does not need much further boosting for fear of allowing inflation to rise. We're going to expect a little volatility in prices in both directions until we see the Fed's remarks once the rate cut has occurred. This coming week there is a fair amount of data, but really until the rate cut happens is all guesswork for traders and anticipation. Gold is currently $26 off its year high, and silver just over $3 off its year high. We've no doubt that both will be higher by the end of this year, but for this coming week, we envisage that gold will trade between $2,460 and $2,540, with $2,450 and $2,575 as outliers, and silver to trade between $28 and $30, with $27.50 to $31 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you would give this video a thumbs up, subscribe and press the bell sign. Pop on over to Finances Do Matter. We will be resuming more videos there very shortly. And all that remains, have a great what's left of your weekend and a prosperous week ahead.